Front and center this hour, surging Alphabet. The stock nearing $4 trillion in market cap. It is a stunning turn of events over the past 6 months. We'll discuss and debate the whole AI trade with the investment committee, as always. Joining me for the hour today, Joe Terranova, Stephanie Link, Brian Belsky, and Josh Brown. We will check the markets. It is a Dow and small cap kind of day. NASDAQ is basically flat, but I'm telling you, the biggest story continues to be this move in Alphabet, which is why we're leading with it again today. Got to $3.98 trillion in market cap, pre-market. It needs today to get to $331.48 to hit $4 trillion in market cap. Joe, I just asked our executive producer, Kevin, this stock has added $2 trillion in market cap since the Eddie Q sell-off 6 months ago. Now, I know NVIDIA has had some unbelievable moves. $2 trillion in market cap added to this name in 6 months. That's unbelievable.
It's staggering, and if you think of what I keep talking towards, which is the return on investment related to AI, this was probably the one Mag 7 name where you had the least confidence coming into 2025 that they actually would do what they're doing now, which is potentially have that strongest ROI on the AI spend. So that dramatic reversal in sentiment is remarkable. It's a credit to Sundar Pichai's strategy of a full stack approach. And now we're hearing about these tensor processing units, which have really been in place for the better part of the last 12 years. Google has been developing them for quite a long time, but what does that allow them to do? Okay, you don't have standing in front of you the regulatory concerns that we had at the beginning of the year. They introduced Gemini 3, which is being widely applauded, and there you go, okay, we're able to defend against OpenAI, and now the unthinkable. They're actually have the ability to challenge NVIDIA's GPU chips.
Oh, I thought you were going to say the unthinkable that Berkshire added a stock like that.
$4.9 billion. Yeah,
by the way, but it's up 16%. Okay, since that was revealed on November 17th. So you got the equivalent of the Good Housekeeping seal of approval from Berkshire Hathaway on Alphabet, and this stock has just been a freight train ever since. Brian, you own it as well. I just don't know that we've seen anything quite like this.
No, I was trying to go through the math too, and you were talking to Kevin in terms of the $2 trillion add. You know, we were very fortunate in April during the depths to double our position in Google, just because we did not believe in the demise of Google due to ChatGPT and OpenAI. And you got to take a big picture, think about this as well. Now, with what's going on in terms of its potential business with Meta. Remember, earlier in the year, they talked about joint ventures and more work with Apple. These are really, really big strategic decisions that were brought on by some of their founders that came back into the business and helped them really derive where they're going in the next several years. And by far, it's our largest overweight in the Mag 7, number one. By far, it's our largest overweight in communication services. And then back to Berkshire, if you take a look at the cash positions alone and how Google is not only managing those, but investing that. And then per Joe's point, in terms of the return on invested capital, those two things are major things that Berkshire has always looked at.
I'm old enough to remember when Steph sold Google, right, and bought Meta. Remember?
Yes.
Remember?
Yes.
Now I'm wondering if we're going to have a reversal. You going to sell Meta and buy Google?
Are you nuts? Are you
I don't know.
absolutely nuts?
I mean, look at the direction of these stocks.
No way.
Put up Meta.
Yeah.
Well, take a look. Put up Meta versus Alphabet, actually, over the last 6 months. Let's just look at that for the sake of the conversation. Because I'm just bringing it up.
Of course.
Because, you know, Meta, everybody was all bulled up on Meta after their worst year ever. Then they had their best year ever. And now I think we have a much more idiosyncratic picture as it relates to the hyperscalers, who is perceived to be well ahead of the pack, who has more questions about it, and where 6 months ago, Alphabet seemed to have all the questions about it, we are asking those questions of Meta now.
So we're supposed to buy low and sell high. So those guys that actually bought more Google, Alphabet, congratulations to both of you. I think Josh also owns it, so congratulations. That's great. But I think that there's tremendous value in Meta, especially after the 21% correction, especially since the earnings estimates actually went higher despite the concerns about higher expenses. So it's now trading at 17 times forward estimates. You know I've been adding to it on the decline because they are seeing the ROI, just like you just mentioned. In a different way. They're seeing better double-digit impression growth, 14% because of AI. They're seeing time spent increase 5% because of AI. And they're getting pricing power. And oh, by the way, they have a $31 billion buyback program, which I'm sure they're in there down here. At least I'm hopeful. And I do like that they are using Broadcom's custom chips. They might use speculation. They might use Google's custom chips. They're setting themselves up to be in the game, and no one's given them credit because they don't have a cloud business. That, to me, is crazy speak. And so I think we're going to make a lot of money in Meta over time. Just have to be patient because I don't see a near-term catalyst, but the stock is awfully cheap for the growth that you're getting. By the way, 20% earnings growth, 26% revenue growth. That's pretty impressive.
That's the problem, I guess, Josh, is what Steph just said. At least it relates to Meta. I don't see a near-term catalyst because all of these other names seem to have near-term catalysts, and they're capitalizing on them, like Google, Alphabet, which, according to the information now, Meta is considering spending billions of dollars on Google's TPUs. They currently rely on NVIDIA's GPUs. So this is another near-term catalyst for this name, that name being Alphabet, which you don't own, by the way.
Yeah, well, the whole world owns Alphabet. It's like the fourth largest company in every major index. So the question is, are you overweight Alphabet or not? And I screwed up with this name. I sold it closer to 200, and I did believe that ChatGPT usage and Claude and a lot of enterprise AI products would be a threat to search. And I think they still might be, but that doesn't matter because what Google has done beautifully is respond to the challenge around its core business with new product, and that new product is working. And it's not just Gemini 3. Yesterday, I was on the show. We talked about Nano Banana, which is their answer to Sora. Like, they're going to have best-in-class products in every major category of AI, and we weren't sure that that would be the case as recently as 6 to 9 months ago. So for the people who made the bet that they would, those people are getting paid right now. I think the lesson, though, for me and for everybody else, is how easily a narrative can form based on share price action, whether it's up or down, and then how quickly that narrative could not just fade away, but completely reverse. Think about the storylines that we've seen this year around AI that have come, gone, and then completely went the other direction. In the early going, Meta was the most aggressive in AI. They were hiring engineers and paying people billion-dollar salaries vis-a-vis acquisitions of startups. It really looked like they were off to a running start and everyone else was still sleeping. Now, Meta's in this bucket where nobody's really sure about whether or not their AI strategy beyond monetizing Reels will be good. Same with Apple. They're not spending enough. Why aren't they doing anything? Why don't they buy Perplexity? Wah! Now the narrative is, look, they didn't spend too much. They didn't get themselves into off-balance sheet debt deals with Blue Owl. They didn't do any of that stuff. New all-time high. So I don't know what the narrative will be on Meta 6 months from now. It could be the polar opposite. People could look at them and say, thank God they don't have a cloud business where they're spending all this money to facilitate other people's AI. Thank God they could just focus on their own business. So I don't think that we want to just look at the last month of Alphabet and Meta and Microsoft and draw these like hard and fast conclusions about what might happen in 26, because you could just flip the deck of cards in the air and pick up the cards in a different order and things could look very different.
Sure.